A very good evening, guys. After doing internal reconstruction, now we take the third chapter of FFI, as I mentioned in the last class, buyback of shares. The next chapter, the third chapter of FFI, buyback of shares. Now, if you all recollect, last year in SEM 4, in FA, you all have done a chapter, redemption of preference shares. This chapter is exactly based on the same concept. Of course, there are certain limits which are a bit different, but half the entries what you all have done in redemption of preference shares is the same. The only difference is there it was redemption of preference shares and here it is buyback of shares. When I say buyback of shares, shares here means equity shares. Meaning is the same. Buyback of shares means the equity shares which you had issued in the past. Buyback of share means the equity shares which you had issued in the past. Now, a part of that you have to give it back to the shareholder. That means you will take back the shares from the shareholders and give them the money. You are buying back the shares from the shareholders. That is buyback. So in short, when I issue shares, my share capital goes up, shareholders give me money. In case of buyback, the money which I had collected from the shareholders, I return it back with either a less amount or more amount depending upon the price decided at the time of buyback. So in short, buyback in simple words you can say redemption of equity shares. What you all had done in SY was preference, now it is equity. This is a very simple chapter. Journal entries you will find it very simple. Comparatively, this is a very small chapter. Here in class, in the normal lectures, I take around 7 odd classes to finish this off. But in case of online, I'll be taking more recordings, and I think today is Tuesday. I should be able to do it by Friday or Saturday, maybe before that. I try to take as many recordings as possible. Okay? Now listen. Before we get into this chapter and uska accounting entries, the first is there are certain things which you are supposed to know. First of all, very important for objective, buyback of shares is governed by section 68 of the Companies Act 2013. ठीक है, याद रखना, section 68 of the Companies Act. Now, when you do buyback of shares, there are two sources of buyback. If you recollect redemption of preference shares, there used to be a formula. Nominal value of preference shares to be redeemed is equal to proceeds from fresh issue plus free reserves. Similar thing you have to do it here, but there is no need to write a formula. You have to show it in the form of point format. Now remember, there are two sources of buyback. There are two legal sources of buyback. Either you take it from your free reserves or security premium. Either you take it from your free reserves or security premium or fresh issue of shares. But here the fresh issue of shares has to be not equity but preference. It can be equity, but if it is equity, it is to be that equity which you are not buybacking. Say for example, you have two shares, two types of equity share. One 10 rupee wala, one 100 rupee wala. So if you want to buy back 10 rupee wala share, you can issue 100 rupee wala share. If you want to buy back 100 rupee wala share, you can issue 10 rupee wala share. But if you are buybacking 10 rupee wala share, you cannot issue equity shares of the same denomination. In short, buyback cannot be of the same equity, issue cannot be of the same equity share which you are buybacking. So it has to be issue of preference shares or a different type of equity share not having the same face value, which is very rare, and free reserves and security premium. So three sources of buyback. I am making the explanation very simple for you all. Three sources of buyback: fresh issue of shares, which is generally preference only; equity, different class, not the same class what you are buybacking; and free reserves and security premium. Okay? These three are the sources of buyback. Free reserves, you all know, it doesn't include specific reserve like capital redemption reserve, development rebate reserve. Free reserves are those reserves which are free to be used for the purpose of declaration of dividend. General reserve, P&L, reserve fund, dividend equalization reserve, all these are a part of your free reserve. Towards the end of the chapter, we will see different types of reserve also. And security premium is generally not free unless and until it is received in cash. But in this chapter, as per the provision of Companies Act, you are allowed to use security premium for the purpose of buyback. Okay, so these are the sources. Now, the limits. There are 3 limits. These limits you have to apply in each and every sum where they will mention, decide the number of shares to be bought back. Sometimes they will give it directly. So where the direct number of shares to be bought back is given, there is no need to apply the limits. You can straight away start passing the journal entries. But wherever they tell you to apply the limit, you have to apply. 75% of the sums made, the 3 limits have to be applicable. Which are the 3 limits? I am discussing orally, then when we come in the sum, today I am doing 2 sums. Initially all the sums made, those limits are to be calculated. First limit, understand very carefully. Limit number 1, number of shares to be bought back. Number of shares to be bought back cannot be more than 25% of the existing equity shares. Number of shares to be bought back cannot be more than 25% of existing equity shares. Say for example, currently the company has issued 1 lakh shares. Okay? Currently the company has issued 1 lakh shares. So company cannot buy back more than 25%. Matlab in this case, as per limit number 1, for this particular thing, your buyback cannot be more than 25,000 shares. As per limit 1, your buyback cannot be more than 25,000 shares. So as per limit 1, maximum number of shares to be bought back cannot be more than 25% of your existing shares issued. Okay? Then, second, this limit is in terms of amount, but again you have to convert into shares. But understand, maximum amount of buyback cannot be more than 25% of paid up share capital, free reserve and securities premium. Maximum amount of buyback cannot be more than 25% of your paid up share capital, free reserves and securities premium. Okay, keep this in mind. The amount to be paid for buyback maximum will be 25% of your paid up share capital. Paid up share capital here includes equity as well as preference, free reserves and security premium. This second limit is in terms of amount. So you get the amount first, then the buyback price might be given. In few cases they will give, in few cases they may not give. So where the buyback price is given, divide this amount by the buyback price, you will get the number of shares. I'll do in the first sum. Right now just understand. So first limit, maximum number of shares cannot be more than 25% of the existing issued share. Second, maximum amount to be paid on buyback cannot be more than 25% of your paid up share capital, free reserves and securities premium. And the next, third one. Third, post buyback debt equity ratio. Post buyback debt equity ratio should not be more than 2:1. Okay? Post buyback debt equity ratio should not be more than 2:1. This third limit will be applicable only where in the question you have debt. Debt means long-term debt. What comes in your company balance sheet under that long-term borrowings? It doesn't include short-term loans, short-term borrowing like bank OD or small loans or creditors name. Only long-term borrowings like debentures, bank loan or other loans which are taken for a longer period repayable after more than 1 year. Debt equity ratio का there is formula which I have done in S1 ratios. It is debt upon equity. When I do the first sum, I will solve everything. Okay? So keep this in mind. 3 limits. First, the maximum number of shares to be bought back cannot be more than 25% of existing equity shares. Second, maximum amount of buyback cannot be more than 25% of paid up share capital, free reserves and securities premium. And third, post buyback debt equity ratio should not be more than 2:1. Post buyback debt equity ratio should not be more than 2:1. Clear? Keep these 3 limits in mind. In the first sum, I am discussing all the 3 limits in detail, and that will follow for many sums of this particular chapter. So keep this in mind. Basic 3 sources: free reserve, security premium, fresh issue of shares. It will be mostly preference shares. If it is equity, it cannot be the same class. You all don't have any sum where there is issue of equity shares. And 3 limits. These are the 3 limits which I will discuss in the sum. Accounting entries. There are certain things to be remembered, but that I will do as and when we come across some. There are few points which are similar to what we have done in redemption of preference shares. Every point I will consider at the relevant stage, because everything if I explain right now, there is no point in wasting time in that. When the relevant sum comes, that time I will explain you in detail. Now first I am taking 2 sums on buyback. Take first page, that is page 55. Page 55, question number 2. Page 55, question number 2. I am making few changes in that. Please make the changes. Let's see. Now see, the first line. A company. After the word a company write intends to. After the word a company write there intends, INTNDS, to buy back 50,000 shares of 10 each at 25 per share. Then they give you the reserves now. Just add the word share capital. So it will be share capital and reserves of the company are as follows. Before the word reserve, between the word the and reserve, add the word share capital. And below right there, security premium is given na 15 lakhs. On the top or side pe right, equity share capital 20 lakhs. Right there, equity share capital 20 lakh, rupees 20 lakhs. That means this is your existing equity shares. Okay? And security premium is given 15 lakhs. General reserve is given 23 lakhs. Add there debentures 50 lakhs. Add there in the question debentures 50 lakhs. So I am adding 2 amounts. I will repeat those 2 amounts. Equity share capital 20 lakhs and debentures 50 lakhs. Okay? Past journal entries in the books of company. Now see, they have mentioned company intends to buy back 50,000 shares. They want to buy back 50,000 shares. You have to decide whether they can do or no. Okay? Now, let's start. How you will do that? Let's start. Okay? Whenever you start, you have to start with the limits. All the 3 limits, in this case, as there is debentures. Had I not added debentures now, the 3rd limit would not have come. Had I not added debentures, the 3rd limit would not have come. Okay? Chalo, now let's take one by one. First limit. Okay? This is which question? Question number 2. How you will do this? Limit 1. This is the way you will present. I used to present in a different way, thoda long cut hota tha, I used to dictate in each sum. But now I will make it short for you all because we are studying online and this is the way board is also accepting. Okay? What I told you, limit 1, you can just give the heading. Maximum number of shares to be bought back cannot be more than 25% of existing equity shares issued. ठीक है? I'll repeat. Maximum number of shares to be bought back cannot be more than 25% of the existing shares issued. Heading पढ़ा है, calculation is very simple. अभी देखो, I added in the question. What is the share capital of the company? 20 lakhs. एक शेयर कितने का है? 10 rupees का. So can I say 20 lakh divided by 10? 2 lakhs. 20 lakh is my total share capital. एक शेयर 10 रुपए का है. So 20 lakh divided by 10, that is 2 lakhs. ठीक है? So my existing shares are 2 lakhs. So now what you will do? 2 lakh is the maximum shares. So 2 lakh का 25%, that gives you 50,000 shares. ठीक है? So as per limit 1, the maximum number of shares to be bought back will be 50,000. As per limit 1, the maximum number of shares to be bought back will be 50,000. ठीक है? This was limit 1. You can write it. Therefore, maximum number of shares to be bought back. This is as per limit 1. Okay? Next. Limit 2. Maximum amount to be paid on buyback cannot be more than 25% of paid up share capital, free reserves and securities premium. ठीक है? Maximum amount to be paid on buyback cannot be more than 25% of paid up share capital, free reserves and security premium. This is amount, then we will convert this into number of shares. अभी देखो, paid up share capital, equity कितना है? 20 lakh. So see, it will be 25% of 20 lakhs. 20 lakhs is your equity share capital plus security premium. 15 lakhs is security premium plus general reserve. कितना है general reserve? 23 lakhs. So 23 lakhs is your general reserve. Now calculate करो. ठीक है? 20 lakh plus 15 lakh 35. 35 plus 23. So 25% of 58 lakhs. That gives you 14 lakh 50,000. ठीक है? Maximum amount of buyback is 14 lakh 50,000. Maximum amount of buyback is 14 lakh 50,000. See, first limit में maximum number of shares was 50,000. Now the maximum amount of buyback is 14 lakh 50,000 shares. Now listen, they may give you buyback price, they may not give you. What they say? Buyback price is given 10 each. You want to buy back at 25 rupees. 10 each. You want to buy back at 25 rupees. Therefore, maximum number of shares . to be bought back, it will be 14,50,000 divided by 25. So that will give you 58,000 shares. Okay? That will give you 58,000 shares. Okay? Now listen, understand. Before we go to the third limit, first limit may understand us because most of the chapter is based on this calculation only. Maximum number of shares, first limit is it cannot be more than 25% of existing equity shares. So we took 2 lakh is the current existing shares. I added in the question 2 lakh into 25% gives you 50,000 shares. So maximum number of shares to be bought back as per the first limit will be 50,000. Second, maximum amount to be paid on buyback cannot be more than 25% of paid up share capital, free reserves and security premium. Paid up share capital equity at 20 lakhs, security premium 15 lakhs and general reserve 23 lakhs. All three ka total is coming to 58 lakhs. 58 lakh ka 25% is 1450. This is the maximum amount. Now they have given you the buyback price. So this maximum amount of 14,50,000 I divide by the buyback price, so I get 58,000 shares. Now listen, before I go to the third limit, I have to shortlist the two. Matlab, as per the first limit, it is 50,000 shares. As per the second limit, 58. Now if I say this is the maximum number of shares, it cannot be this. And if I say it is this, but here 50 is less, so what you will do? If I say I want to buy back 58,000, it goes against the first limit. So before I take up the third limit, my maximum number of shares at this stage will be as per limit 1 or as per limit 2, whichever is lower. Which is lower? 50,000. So considering the first two limit, my maximum number of shares to be bought back will be 50,000 shares, the lower of the two. After this, I have to go for the third limit. Okay? So we can just write a small conclusion. Okay? Considering, I'll just take another pen. Considering the above two limits, the maximum number of equity shares to be bought back will be the lower of the above two limits, you can say, will be the lower of the above two limits that is 50,000 shares. Okay, so 50,000 shares will be bought back keeping in mind the first two limits. Now listen, had I not added debt in the question at debentures add nahi kiya rehta na, my conclusion is 50,000 shares. Now what I'll do, I will see the third limit. Because there is debt, I will see the third limit. Okay, what's my third limit? Limit 3. ये थोड़ा ट्यूबलाइट का शैडो आ रहा है, डोंट वरी, व्हेन आई टेक द पिक्चर मैं इसको बंद कर दूंगा तो क्लियर पिक्चर आएगा. ठीक है, लिमिट 3. पोस्ट बायबैक debt equity ratio post buyback debt equity ratio cannot be more than 2:1. ठीक है, post buyback debt equity ratio cannot be more than 2:1. debt equity ratio you all have studied in SY. The formula is debt equity ratio is equal to debt upon equity is equal to debt upon equity. Now ध्यान रखना, debt again I am repeating, debt here means long term debt, not, it does not include short term debt, it will include long term debt. So long term debt देखो क्वेश्चन में मैंने ऐड किया, क्या है डिबेंचर्स, कितना ऐड किया डिबेंचर्स 50 lakhs. So my numerator is 50 lakhs upon, now understand, equity. Although the word is equity, here equity will include proprietors fund, that is share capital, equity and preference, free reserves and security premium. Even though the word is equity, it doesn't mean equity means equity share capital. Equity here will include equity share capital, preference share capital, free reserves and security premium. कितना है देखो, हमने already calculate कर दिया, 58 lakhs total ना. So this is 58 lakhs. 58 lakh was my equity before buyback. 58 lakhs was my equity before buyback. Now listen what I do. I want post buyback. What was my conclusion? मैंने कितने shares buyback किए? I have bought back 50,000. I am intending to buy back 50,000 shares. Lower of the two. याद रखना. The third limit you will do after taking the lower of the first two. कितने shares buy back करने? I want to buy back 50,000 shares. How you got 50,000? ये वाला. The lower of the first two limit. And what is my buyback price? 25. So now you see what is your post buyback equities, debt equity ratio. ठीक है? So 50,000 into 25, 1250. So 58 minus 1250 gives you 4550. Therefore, your debt equity ratio post buyback is 50 lakh divided by 55, 1.10 is to 1. ठीक है, 1.10 is to 1. ठीक है, so your post debt equity ratio is 1.10 is to 1. What should be the maximum limit? 2 is to 1. So this is just to confirm that this should not be more than 2 is to 1. If this goes above 2 is to 1, क्या करना है? That we will see on the last day of this chapter. If this goes above 2 is to 1, क्या करना है? That we will see on the last day of this chapter. ठीक है? अभी देखो, ये 2 is to 1 के नीचे है. So if this is less than 2 is to 1, no problem, you go for 50,000 shares. अगर ये 2 is to 1 के ऊपर होता, then ये फिगर भी चेंज होता था. How it will change, that as I told you, we'll see on the last day. So now, because my third limit का debt equity ratio is coming less than 2 is to 1, I can safely say, now I can buy back 50,000 shares. ठीक है? So first limit 1, limit 2, take the lower. Then see limit 3. Limit 3 2 is to 1 के नीचे है. So you can say, now I can buy back 50,000 shares. So now you write the conclusion. Since the post buyback debt equity ratio, since the post buyback debt equity ratio is less than 2 is to 1, company can buy back 50,000 shares. ठीक है? Since the post buyback debt equity ratio is less than 2 is to 1, company can buy back 50,000 shares. So starting में what we have done, we have company ने intent किया, company intends they want to buy back 50,000 shares. We have to tell them whether they can do that or not. Yes, they can do that. Got it? Once you get this, then there are journal entries, and journal entries are very straightforward. There are only 4 entries, which I do it here. Got it? So I'll repeat. Limit 1, existing number of shares, uska 25% gives you 50,000 shares. Number 2, get the amount, which will be 25% of paid up share capital, free reserves and security premium. Whatever amount you get, divide by the buyback price, that gives you number of shares. Take the lower of the two, 50 or 58, whichever is lower, so you get 50,000. Then take debt equity ratio. Your debt equity ratio will be post buyback. So here it is coming 1.1. We have to just check, this should not go above 2:1. If it is less than 2:1, then it will be the same answer what you got here. If it is more than 2:1, then we will see what is to be done. It can be exact 2:1, but not more than 2:1. So because it is less than 2:1, company can buy back 50,000 shares. Okay? Now we will see what entries. Let me see video kitna bada ho raha hai. Okay? Now we will pass journal entries. Journal हो जाएगा इसके अंदर. There are 4 entries. Very simple हो जाएगा. Journal of company, नाम नहीं दिया है. ठीक है? Now listen. First, you have to check whether there is any fresh issue of shares, or is there any transaction where money is coming in. There is no fresh issue of shares. There is no other sale of assets. So straight away we can buy back shares. Now listen. What is the conclusion? How many shares we are buybacking? 50,000 shares. We are buybacking 50,000 shares. कितने का एक शेयर? 10 रुपए का है. But what is the buyback price? 25 rupees. 10 rupees का एक शेयर है. I am buybacking at 25 rupees. That means can I say per share I am paying 15 rupees extra? एक शेयर 10 रुपए का है. I am buybacking at 25. So 15 rupees is my premium. First entry in this case will be the amount due to equity shareholders. It is exactly same what we had done in SY for preference shares. Let's see what is to be done. Dates are not given, so I use serial number format. When I issue shares, I credit equity share capital. Now I am giving it back, so I debit equity share capital. The first thing what I will do is equity share capital account debit. How many shares I am buybacking? 50,000. So it will be 50,000 into the face value. Remember, when I debit or credit share capital, it has to be always the face value. So 50,000 into 10, that is 5 lakhs. I will debit equity share capital 50,000 shares into 10, that is 5 lakh. Buyback price is 25. Buyback price is 25. Face value is 10. That means can I say I am paying 15 rupees extra? That is my buyback premium. Buyback premium means the extra amount which you are going to pay over and above the face value. यहाँ पे my buyback price is 25 rupees. My face value is 10. So जो excess 15 rupees at 25 minus 10, that becomes my buyback premium. So what you will do? You will debit premium on buyback account, or you can call it as buyback premium, which will be 50,000 into 15, that gives you 7,50,000. So I have to pay them 25 rupees per share, 10 towards capital and 15 towards premium. Payable to whom? I am not paying. Payable to whom? Shareholders. Which shareholders? as I told you, buyback of shares is equity shares. So this is payable to equity shareholders. So I credit equity shareholders. So to equity shareholder 12,50,000. To equity shareholders account 12,50,000. Okay? Narration B, amount due to equity shareholders. B, amount due to equity shareholders. Getting it? If you remember, you all had done the same entry last year. Preference share capital, premium on preference shares, premium on redemption, we use the word premium on redemption to preference shareholders. यहाँ पे same है, instead of preference the word equity is there, and instead of premium on buyback there it was premium on redemption, यहाँ पे premium on buyback. ठीक है? This entry will come in each and every sum. Where the redemption is at par, premium will not come. Clear? Now listen. Next entry. In case there is a premium on buyback, in this case there is a premium of 15 rupees. My next step will be to write off the premium. Premium on buyback debit kiya. Now I'll have to write it off. Write it off against what? I will write it off against free reserves and security premium. I will write it off against free reserves and security premium. कितना है प्रीमियम? 750. देखो फ्री रिजर्व में क्या है मेरे पास? जनरल रिजर्व एंड देयर इज अ सिक्योरिटी प्रीमियम ऑफ 15 lakhs. I can take anything. I can also take security premium first, or I can take general reserve. The general trend is to take security premium, but even if you take general reserve, no problem. What we will do, we will stick to one thing. When it comes to premium on writing offs, we will apply the same concept what we did in SY. We will use security premium first. अगर security premium कम पड़ेगा, then we will take general reserve. But again I am repeating, even if you take general reserve first, no problem. I need 750. मेरे पास security premium में 15 लाख है. That means can I say पूरा का पूरा 750 है? ठीक है? So my next entry, premium debit है. Now I will credit, and I am writing it off against security premium. So security premium account debit 7,50,000 to premium on buyback account 7,50,000. ठीक है? I repeat, I have debited premium on buyback. Now I will credit, and it is to be written off against security premium. So I debit security premium. ठीक है? Narration B, buyback premium written off. ठीक है? B, buyback premium written off. Clear guys? As I told you, even if you write general reserve, no problem. You can put a note. Premium on buyback is written off against security premium. Alternatively, it can be written off against general reserve. ठीक है? After this, I'll try to give the note or I'll send the picture. Clear? So first entry, amount due. Next entry, write off of premium. Next, now listen very carefully. What I told you starting with, there are three sources. Fresh issue of shares which is not there. Next is security premium or free reserves. Now listen very carefully. The same point you all have done last year in redemption of preference shares. When you buy back the shares, the buyback amount, when you buy back the shares, the buyback amount which is equal to the nominal value of face value. यहाँ पे face value कितना है? 5 lakhs. Only the face value, not the premium. That as per the Companies Act has to be transferred to a special account called as CRR. That has to be transferred to a special account called as CRR, Capital Redemption Reserve. ये तुम लोग ने लास्ट ईयर SY में भी किया हुआ है. So what I will do, I will transfer to CRR the buyback amount का face value only. Buyback amount is 1250, but face value कितना है? 5 lakh. That is the amount what I have written against share capital. So this 5 lakh I will transfer to CRR, and when I transfer to CRR, there we used to take from free reserves. Here also we will take from free reserve, but if required, you can take security premium. but we will stick to the same trend what we did in SY. We will take general reserve. I need 5 lakh. मेरे पास general reserve 23 lakhs है. So I write the same thing. I'm using it out of general reserve. So general reserve कम हो जाएगा. So I debit general reserve 5 lakh. And this we credit to a special account called as CRR. So to capital redemption reserve account. Getting it? Remember, not the total amount, only the face value. Face value will be transferred to CRR. यहाँ पे also, even if you take security premium, no problem. ठीक है? Narration B. General reserve transferred to CRR, or you can say being free reserves transferred to CRR. Got it? Clear with this? So there are 4 entries. 3 हो गया. Last one very simple. See the first entry. Equity shareholder को credit किया 1250. Now उनको pay करना है. When it was payable, I credited equity shareholder. Now I'll pay them. So I will debit. So my last entry will be I will debit equity shareholder as it is payable to them 1250. When it was payable, I credited. Now I am paying them, so I will debit, and money will be paid to them. So I will credit bank account 12,50. याद है हम लोग पहले भी करते थे. Amount due to preference shareholder, then the amount paid to them. Same way यहाँ पे I will debit equity shareholder. यहाँ पे when it was payable, I credited. Now I am paying, so I will debit. So equity shareholder debit, account settle हो गया, and I will pay them. Money goes out, so I credit bank. Narration B. Equity share holder account settle. ठीक है? Being equity shareholder account settle. Clear? So this was the sum on buyback. Sometimes they will just tell you to pass the journal entries. वो sums भी आएंगे, and sometimes you'll have to calculate all the 3 limits. Sometimes you may have to just calculate 2 limits. Getting it? So I repeat. Limit 1. Maximum number of shares cannot be more than 25% of existing shares. Limit 2. Maximum amount to be paid cannot be more than 25% of paid up share capital, free reserves and security premium. Take the lower of the two, then apply debt equity ratio. Check whether it is going above 2:1 or no. If it is not going above 2:1, it's fine. You will buy back the same number of shares what you decided earlier. Otherwise, it will change. Then the 4 entries, not necessarily 4 entries in all the sum. It will keep on changing. In this sum, debit share capital to the extent of face value. Premium amount, debit premium on buyback. Next entry में write off the premium. You can write off against free reserve or security premium. उसके बाद the amount which you have debited to share capital, the face value, which in this case is 5 lakh, transfer it to CRR. That also you can transfer from free reserve or security premium. And last entry में pay off. ठीक है? Now एक काम करो, just 2 note लिख दो. The 2 notes will be applicable for all the sums wherever required. ठीक है? लिखो note number 1. Note number 1. Premium on buyback. Note number 1. Premium on buyback is written off. Premium on buyback is written off against securities premium. Premium on buyback is written off against securities premium. Alternatively, it can be written off against general reserve. Alternatively, it can be written off against general reserve. ठीक है? Second note. Transfer to CRR has been made. Transfer to CRR has been made from general reserve. alternatively, it can be made out of securities premium. Alternatively, it can be made out of security premium. Okay, so what happens by writing this note, you are safe, because sometimes general reserve is used, sometimes security premium. There is no legal condition, you can use any, so the best way is write it. Okay, so that's it for the first class. I'm taking another video, I'll take a break. I'm coming back in the next video. Just listen to this video carefully. Again, whatever we have done will be brushed up in the next video. Okay, I'm just temporarily taking a break.